everyone, my name is Min. Today I'm gonna tell you about mobile payment. So before we start, I'm gonna tell you a little bit about what is fintech. Nearly every day it seems a new mobile payment system is announced by tech startups, giant technology firms, national retail merchants, or banks. The term fintech originally was used to characterize startup technologies firms who aim to improve the variety of financial services from depositing and withdrawing funds to making investments, obtain loans, and making payments both to merchants and to individuals. The use of smartphones for mobile banking, investing, borrowing service, and cryptocurrency are examples for technologies aiming to make financial service more accessibility to general publics. Financial technology has been used to automate investment, insurance, trading, banking service, and risk management. Due to the rapid growth of fintech industry, the mobile payment market, for instance, is a battle between tech titans such as PayPal, Google, Apple, Samsung, and smart startup tech company backed by millions in venture capital, and the bank credit card giants who are building their own mobile payment system and investing in startups to lead the charge. Large retailers like Walmart, Best Buy, and Target has also jumped into the fray by developing their own brand mobile payment apps. So, what are the three types of mobile payments? First, there will be universal proximity payment system can be used at participating merchants at a point of sale payments. The second will be branded proximity payment system, use proximity technology but can be used only at a single merchant stores. The last one will be P2P payments, can be used to transfer funds among users who are installer and proprietary app. So for you to more have clearly about what is the three of the system is, I'm gonna show you the popular app for this. So universal proximity payment system, there will be Apple Pay, Google Pay, and Samsung Pay. The second one, branded proximity payment system, there will be Walmart Pay, Starbucks Pay, where you can just only use it in Walmart or Starbucks. And the last one, P2P payment, will be Venom's, Zelle, and Square Cash, where you can transfer your money from bank to bank, another bank account without fees. So move to the next questions. Which age groups are the most likely to adopt mobile payment apps? As you can see in the graph I show, throw in the newer formers of mobile payments is strongest among millennials and Gen Zers, who have significantly decreased their use of checks and who, unlike their parents, are comfortable handling their financial transactions using a smartphone. For instance, almost 60% of millennials mobile phone users are expected to use proximity mobile payments in 2020 compared to just 11% of baby boomer mobile phone users. So as you can see, the people from age 51 to 87 are like the old people. They are really hard for them to catch up following update using technologies, and for them also there is still much skepticism and concern about using financial technologies, and across all generations people are still more likely to trust traditional methods such as credit and debit card. So for more specifics, I can give you an example in Germany. According to BWC, statistic, they're just only 55% using mobile payments, and in there will be 46% of people under the age of 30 using mobile payment system. And when they ask all the people in Germany, they say 39% of people believe that cash will still be used in 5 years term. And just 10 Germans, only 7 is under 40 intend to use mobile payment in the next 5 years. So I think it's also depend on the traditional how people use money, the payment method in specific countries. Like Germany, people are preferred using cash more than even credit card and debit card. So move to the next questions. Why have fintech startups had a hard time competing with the tech giants? Major tech companies are involving with the time in trying to implement mobile payment into their business plans. The company are trying to come up with the ways to make their product seem attractive, like not storing money with the company free to consumer and a lower transaction fee. So, and also they are not growing as fast as expected. The fintechs are not growing as fast as expected because the reason like lack of implementation with a merchant using NFCs. Merchants want to keep relationship which allows them to open store credit card, loyalty reward, product promotions, and gather customer data like Starbucks with Starbucks Pay, Walmart with Walmart Pays, and also, for example, Apple, Google, and Samsung on the hardware and software platform of the ubiquitous smartphone, making their device and service more useful to the customer, while PayPal and Square operate large-scale online payment processing platform and apps that can be used on all smartphones. Also, with tech giants, they already have large and stable number with suppliers. That is a dream number of fintech startup to get. So the next questions will be, what is Zelle? Zelle is a responsive traditional bank to fintech. Zelle is a digital payment service that allows bank customers to make digital payments and transfer to other account holders using an app and to receive payments from others. Zelle partners with more than 100 banks in US. Zelle introduced Zelle QuickPay in 2017 and rolled it out to mobile banking customers at the 30 national banks. Within 1 year of its introduction, Zelle had attracted nearly 30 million users. So why had Zelle grown fast in a few years? Users just need to know either the email or cell phone number of recipients while using Zelle to transfer, and the transfer are nearly instantaneous and are referred to as instant payment in contrast to other digital payment systems, which typically require one business day or more to complete. The transfers and payments among existing accounts are free and typically rely on customer existing checking account. This is how Zelle gained and uphold the numbers of users. Originally founded in 2011, Zelle had role include over 250 financial institutions, as well as working with MasterCard and Visa to support P2P payment with debit or credit card. Zelle had a tight integration with banks and service that such as wire transfer, global wire service, depositing checks using image recognitions, and ACH direct debit and deposit transactions such as automatic payments and recurring bills from utility, telephone, rent, and even charitable contributions. So ACH is a digital clearing house that primarily means of direct money transfer to US. It operates by the Federal Reserve and participating banks in such. Zelle enabled nearly a complete range of banking services using smartphone and PC without having to use local branch bank, with the exception of mortgage and personal loans. So with the COVID situations, I want to update another fintech and mobile payment app that is start rising right now, and it's really helpful for people with financial pay status. So the app is Sezzle. So Sezzle is an e-commerce payment platform launched in 2017, enable customer of participating online store to split the payment for their purchase into 4 installments. The first install will be paid at the moment of purchase, while the other 3 are due at regular interval over the following 6 weeks. So as you can see, you will at using Sezzle, you can buy one thing at that time, but you pay just 1/4 of the price, and then after that you will pay just 1/4 little by little. So it's really helpful for you to manage your finance, and also people are really like it because in corona situations you don't have a lot of income, so it can help you to get what you want without paying more. So with Sezzle is now growing in US, and now are growing expand to the European in France, Italy, Germany, and Spain. That is the end of the presentation. Thank you for watching.